If one bad trading day ruins your entire week, this video's for you. We've all been there. You take a loss. It's frustrating, it's painful, and it's supposed to be just a part of the game. But then, Monday's loss bleeds into Tuesday. Tuesday's hesitation turns into Wednesday's anxiety. And by Friday, you're not even the same trader you were at the start of the week. Why does this happen? Why does one bad day have the power to derail everything that follows? Let's imagine a trader. We'll call him Michael. It's Monday afternoon. Michael closes his laptop, but the red on his screen is burned into his mind. He took a significant loss, one that broke his rules. He feels that familiar sting of regret, the knot of frustration in his stomach. He tries to shake it off, tells himself tomorrow is a new day, but it isn't. On Tuesday morning, Michael wakes up late. He didn't sleep well. That loss was replaying in his head all night. He gets to his desk, opens his charts, and the market looks just like it did yesterday. He sees a potential setup, one that fits his plan perfectly, but he hesitates. The memory of yesterday's pain is still fresh. What if it happens again? He second-guesses himself. The window of opportunity closes, and the trade moves without him. Now, on top of yesterday's loss, he feels the sting of a missed opportunity. The negative cycle is already spinning faster. By Wednesday, Michael is trading from a place of fear. He's not analyzing the market objectively anymore. He's analyzing his own potential for failure. Every potential entry feels like a threat. He takes a small, hesitant trade, hoping just to get a win back, to feel good again. But because the trade is driven by emotion and not by his strategy, it quickly turns against him. He takes another small loss. It's not about the money at this point. It's the mounting emotional weight. He's now convinced the market is out to get him. His confidence is shattered. He finds himself just staring at the charts, not seeing patterns, just seeing danger. He grabs a journal, not to analyze his trades, but to write down how he feels. Words like stupid, failure, I can't do this feel to pay. The technical problem of one bad trade has become a deep, personal crisis. By the end of the week, he has either revenge traded himself into a deeper hole or avoided the market entirely, crippled by anxiety. One bad day has successfully poisoned the next four. So, what's the mechanism behind this? Why are we so susceptible to this downward spiral? It's not because we're weak or bad traders. It's because of how our brains are wired. The first reason is that emotional memory is far more powerful than factual memory. You might not remember the exact price you entered a trade 2 weeks ago, but you will absolutely remember the gut-wrenching feeling of a major drawdown. Our brains are designed for survival. They flag painful experiences with a strong emotional tag, essentially saying, danger, avoid this feeling at all costs. So, when you sit down to trade the next day, your brain isn't just seeing charts. It's retrieving that emotional memory of pain and screaming threat alert. This puts you in a defensive fight-or-flight state, which is the exact opposite of the calm, objective mindset needed for successful trading. The second reason is that stress is cumulative. Think of your emotional capacity like a cup. A normal trading day might fill it up a little bit with small stresses. A good night's sleep usually empties the cup. But a big, emotional loss doesn't just fill the cup. It makes it overflow, and you don't have time to clean up the mess. The next day, you start with an already full cup. The smallest new stressor, a minor losing trade. A missed entry causes it to overflow again. This is why, on Tuesday, Michael's hesitation felt so much worse. He was carrying the stress from Monday. His nervous system was already on high alert, making him overreact to normal market movements. Unresolved stress contaminates your perception and your decisions. This leads to the third point. Unresolved emotions hijack your decision-making process. The part of your brain responsible for rational, logical thought. The prefrontal cortex gets overpowered by the emotional center, the amygdala. When the amygdala is firing on all cylinders, your ability to stick to your plan, manage risk, and see the market clearly goes out the window. You are literally not the same person. You're not a trader executing a strategy. You're an emotional being trying to avoid pain. This is why Michael started making decisions based on feelings, not his well-researched trading plan. So, if this is a natural human response, Are we doomed to repeat this cycle forever? Absolutely not. The difference between an amateur trader and a professional ISNT that the professional never has a bad day. They do. The difference is that they have a process for containing it. They don't let Monday's loss meet Tuesday's open. They build a firewall between trading sessions. Let's look at what the pros do. They practice what we can call an emotional reset. Just as they have a routine for starting their day, they have a non-negotiable ritual for ending it. This isn't about looking at charts or planning the next trade. This is purely about closing the emotional loop of the day that just passed. One key ritual is a structured end-of-day review. This is different from the emotional journaling Michael was doing. It's an objective process. A professional trader will look at their trades, both winners and losers, and ask, did I follow my plan? Not, did I make money? But did I execute correctly? This shifts the focus from the outcome, which you can't control, to your process, which you can. If they followed their plan and lost, it's an accepted part of the business. If they broke their rules, they identify the mistake without harsh self-judgment, make a note of how to correct it, and then they let it go. Another powerful technique is what's known as a session closure. This can be a physical act. It could be as simple as closing your trading platform, turning off your monitors, and saying out loud, the trading day is over. For others, it's a short walk outside. No phone, no distractions. Just 10 minutes to breathe and mentally disconnect from the market. Some traders meditate, listen to a specific song, or switch to a completely different Ingahim task. The specific ritual doesn't matter as much as the consistency. The goal is to create a clear psychological boundary. You are signaling to your brain, this chapter is closed. We are no longer in trading mode. This practice prevents the emotional residue from one day from contaminating the next. It allows you to empty that cup of stress each and every day, so you can start fresh the next morning. You arrive at your desk with a clean slate, ready to see the market for what it is, not for what it did to you yesterday. The big takeaway is this: every single trading session needs an emotional reset. A bad day is only a bad day. It only becomes a bad week if you carry it with you. Your performance as a trader isn't defined by what happens during market hours, but by how you manage yourself before and after. Your ability to hit that mental reset button at the end of each day is one of the most critical skills you can develop. It's the foundation of longevity and discipline in this field. So, the next time you have a losing day, acknowledge the feeling, don't suppress it. But then, perform your closer ritual. Review your process, not the outcome. Close your charts, and physically and mentally walk away. Let Monday's loss belong to Monday. Don't invite it into the rest of your week. If this idea resonates with you, and you're reinterested in more strategies for building a professional trading mindset, consider subscribing to our channel. Thank you for watching.